Good Friday, everyone. On this Good Friday, welcome to a new video. Today we're going to discuss Bitcoin, Ethereum, and ChainLink. I'm going to discuss the equity markets on the video tomorrow or on Monday live stream. So I'll just keep it on crypto for now. Wasn't the best week for my health, but I'm starting to feel better, which is wonderful. And the price is working the way I want it to be seen, so it's okay. I've just used a pretty plain chart to show that we've lost an uptrend and we've been showing weakness. Overall, we just had the first drop down, which is not showing up in the volume yet. That's why I'm expecting a further drop down south to test lower levels. And especially if you check the weekly, then it's not looking really well. Given that, something about the equity markets. Given that the equity markets are going up, while they receive numbers they have not seen before with the jobless claims and the recession going to be heavier than 2008. I can only imagine that it's a bull trap. So for that, I'm also assuming that Bitcoin is in a corrective modus upwards from the crash, which has to come down for support, as I've been discussing pretty often lately on the videos. And next to that, I kind of get the feeling that we might be seeing some strength in this rally, given that people are expecting an effect on the halving, which basically the essential halving, the moment of the halving, is a big non-event, but it's used as a narrative for an upwards trending market for a little while, which always corrects. So we come to the scenarios in a little bit and what I'm expecting on the market, but we could be seeing some strength here, given that people are anticipating on a positive effect of the halving, which in general is going to be a positive effect on long-term perspective. I mean, the halving is just an halving. It's not that something is changing on the supply of Bitcoin, that's true, but it's the actual effect takes place on the longer term perspective. It's the same as with the Fed and using an infinite quantitative easing. I mean, a short-term effect is there that the markets are going up for the equity markets, as people say, okay, this is helping our economy. Long-term, it's actually going to be destructive for the economy itself, as it's just increasing the inflation probably in a few years from now. And then we are getting a copy of the 1920s with Germany and the hyperinflation we've seen then and the crash of the economy, as it's just not a sustainable way. With the Bitcoin halving, people are anticipating an effect immediately while the supply is decreasing, which is actually a good event in the long term, as there's just the supply is decreasing while the supply on the dollar is increasing, and at some point it's the same with gold and silver. The demand will increase because people will fly out of the fiat currencies towards currencies or just metals or a cryptocurrency that has the opposite effect and actually should be increasing in price because the dollar is just devaluing. Aside from that, I'm assuming that this rally could also be fueled from the halving and could see some strength by that. But is it sustainable to see that we're going up with the decreasing volume? No. Are we getting towards the top? I assume we are also getting towards the top for the equity markets, as I just don't see any pace calming down on the coronavirus. I mean, Italy is in a lockdown for about 6 weeks now, 5-6 weeks, and still standard numbers every day. They're going to extend the lockdown. We are getting more measures in the Netherlands. Like small towns over here have an insane amount of debts increase as well. So people are assuming that it's over in a few weeks. They are just, I don't know, deaf. So given that Bitcoin is a risk-on asset and has been having a positive correlation lately, I'm assuming that crypto will just crash alongside with the markets. So I still believe that cash is king, but long term, every dip on the crypto scene is just a massive opportunity to buy. Alright, that's a little bit of a monologue, but that's just my view. Let's get towards the markets right now. And I think I'm going to discuss it through the total market cap first, and then I'll just go ahead towards Bitcoin. If we check the total market cap, we can see that we have seen a pretty substantial move upwards as well. And the total market cap always gives a pretty much clearer view than Bitcoin alone. Total market cap rallied towards the resistance here, while Bitcoin did not get there because people were front running each other. The 76, 78 area at the top of a rally, so like this is the resistance area. It's either gonna be something like this that we just do not hit it, or we slam dunk and liquidate and go down. Which we might be even have seen with the 6.9k level or the yearly level at 7.2. The majority was short, got stopped out, flipped long, and then we dropped. So while the total market cap is not a tradable asset and gives a pretty much clear view on the market, through that you can see that we've rallied all the way towards the resistance over here, made a pretty nice rising wedge structure. Volume we can't use on this chart, unfortunately, and we broke down. Alright, so we broke down after hitting this resistance area here, which is also a monthly and a weekly level, and now we are finding support at the 6.8 zone on Bitcoin, and also the last level for bulls to hold. If we lose this zone here, I'm assuming that we're just going to slam dunk below 175, and you can just check the 153 billion level as the next support. And if we do that, I'm also assuming that this is just an ugly weekly candle, and that we are ready for further downwards moves, or just at least an accumulation period. So what I've been saying is that I'm still cash is king and still remaining in cash, because I just do not believe the last part of the rally upwards. And I'm sticking to my intuition. So if we lose the level here at 185 billion, which is confluent with the 68 zone on Bitcoin, shit is heavy. If we go to the altcoin market cap, we can see that it rallied to the same area as we see here, dropped down, bounced on the support area here, and now we're just stuck in the range. But it's kind of the same view as we've seen on many downwards movements. It happens quite often that we just rally up and then we come back down to test support. After such a drop down, I'm just okay. It's good to see that we are making a quick bounce up, back testing the previous support level for resistance. We confirm it. If we lose the 62 billion level, I'm assuming we are just going to go down further to test levels we have to in order to find any bottom formation. In the history, it's just quite often doing that. Even in this crash, it rallied pretty heavy upwards, and then we came back down all the way. I'm just not saying that we're going to see the same, as we are in a different period of the whole structure, as you can see. But it's showing that such a rally upwards always has to find support somewhere. Then, our great friend, the Bitcoin. I have to delete this for a little bit. Alright, so what I stated here is that we are seeing declining volume on the move, which there's some volume kicking in. Yes, it's overall higher than we have seen over here, but it's decreasing on the rally upwards, and that's not a showing strength. What you want to see is that that there is just a grind upwards and then a big pop with volume on the breakout. Over here there's also an increase in volume. So that gives me a confirmation, or at least a thought, that we are not in a bullish market at this point and that we're just correcting upwards. However, we tested this level here, which was the pretty much first level of support after breakdown of this yearly level here. We are also in Easter weekend right now, and the CME closed over here. So my main expectations for the market right now is that we're getting a pretty boring weekend until at least Monday. I don't know when the CME futures are opening, but at least until morning, and we might be testing the yearly level at 7.2 to confirm that we are showing resistance here after it has been support, and then go down towards below 6.9. Confluent with my thoughts on the equity markets, thinking that they have to drop down next week as well, unless something special happens. But even oil has been seeing a pretty heavy drop down after market yesterday. I can show that as well. It rejected and retraced down, and that's not a small retrace. It's a 14% drop. So my main scenario right now is that we are going to see some slight movements up. I don't know if we even get towards 7170. If we get there, that will be nice. But we just move inside some range this weekend during the Easter, and then we start to crash down if we reject at that level. Because if we reject here, we're making a lower high, and I'm not believing that we're going to hold this level at 6.8. And if we lose 6.8, 6.9, the only first level I assume we're going to see is around 6.3, 6.2, and then the next zone is 5.8, 5.6, which is going to be a heavy drop for the market. Alongside with this view, I'm also mostly focusing on Bitcoin and the major altcoins, and I'm not focused on the smaller caps because of the volatility. If these drop, you can expect your altcoins to be crashing heavily as well. And given that there is an uptrend lost on Bitcoin, I'm assuming that we're going to see a further drop down. And if we drop below 6.8, I can imagine a ton of stop losses getting hit, which will show up on the volume here with a heavy crash. So that's my main scenario for now. The other scenario would be that we're going to see the drop down already, but as we are holding here, I'm assuming that that's not valid for now. The other scenario is that we are going to break through this level and would see some more sustainable upwards rally, pre-halving, maybe some FOMO. Then I'm going to watch at 7.6, 7.8 and 8k again for some shorts, as I'm not expecting that we are going to see a further upwards move. At least have to test 5.3, 5.2 for support before we can continue. Then a little bit about our altcoins. I wanted to short Ether at around 184, 192, but I didn't get the opportunity, unfortunately, as we already rejected at 176, which I see is a small level, which is fine. Oh yeah, it's a level, I can see that. Let's put it together here. That's a level, a daily level. Unfortunate. So yeah, we dropped down. We bounced at the green zone, which is a daily support zone at 155. Was not interested in longing this one as I had ChainLink already, but it's the same crucial level as we have seen on Bitcoin. If we grind back up here, they are just probably correlated with each other. If we grind up, reject at 165 to 167, I'm assuming we're just going to fall down, skip this level, and go towards the zone here, and then we just continue to drop. So that's what I'm watching for Ether right now. This is a long zone. It's the same as Bitcoin, and as everything is correlated with each other, they just move together. If Bitcoin grinds to 7.6, 7.8, I'm assuming that Ethereum is going to hit towards 184.92. And then I'm looking for shorts here as well. And as you can see, Ethereum and Bitcoin did not get towards the level you want them to be getting. While the total market cap and total altcoin market cap did actually hit the level, so they give you a more clearer view. Larger time frame, I don't like the weeklies either on Ethereum and Chainlink. This is just garbage. So I'm just sticking to my view that I'm expecting the markets to at least be in an accumulation for the year, in the best case. A main example for Ethereum, as you can see, is the area over here, in which we bounced up as well, and then we just massively crashed in the week after. I'm not expecting that to happen, but the structure is just not there to be bullish at this point. You become bullish at supports and bearish at resistance. So if we see a move like this upwards, like we see here, that's another short opportunity, expecting a further drop downwards. I have to forget this one. Ether BTC, we broke up. Did not expect it to happen over there. Was anticipating a drop until here. Similar view, getting towards the range here. I'm looking for shorts. Getting towards the levels here, I'm going to look for longs. And right now, I am not in any positions. Chainlink, I've traded this one as I was seeing a pretty nice support level here. Scalped in some longs. I don't know what I'm doing right now, which is wonderful. Scalped in some longs, took profits at 325 and 380, and I'm fine with that. Chainlink is usually just a heavy coin, moving heavy. We could be seeing pretty much a new high and then make some more bearish divergence here before we come down. At this point, I'm just going to wait until there's a new buy opportunity on Chainlink. Given that Bitcoin, I'm expecting a drop down on Bitcoin, I'm assuming that Chainlink will crash down alongside with Bitcoin. And if we make a lower high here or make a higher high here, I'm going to look for the green zone here, and I'm going to check this whole area here to see whether we can scoop in some longs. But at this point, I'm not seeing an entry. I've just traded it and I'm fine. If we get a similar pattern as with Bitcoin, in which we make a higher low here, so then I'm going to look for 305 and then make a pattern like this. It's the similar way as Bitcoin with 6.9. What is it, 6.8? But for now, I'm just out of here. Chainlink BTC is actually showing a pretty strong move up after the weekly level that flipped for support. Cracking above here, I'm assuming that we're going to see 51k satoshis. And but for now, I'm just not seeing an entry. You can also make a bearish divergence here. Massive move, but stay safe and don't rush into any positions, given that there's some heavy volatility expected to come after the Easter weekend. So that's my view. Thank you for watching, and I'll probably see you tomorrow or on Monday.